Welcome to TheoTrade. This is Don Kaufman, March 30th, 2020. Got about 6 minutes left inside of your trading day with the S&Ps once again ripping to the upside. Got the S&Ps up 3.3%. Hey, at least we're not lock limit up one day, lock limit down the next. We're staying within the rails for the time being. But I got to tell you, this is not exactly what you would have expected for this trading session based on some of the news that you saw over the weekend. You get the entire trading communities on one side of the market. Everybody's looking at the news this weekend thinking, this is going to hurt. This is going to be ugly. And yet here we are. The S&Ps are up some 90 handles. And we're right between gravity points right now inside of the S&Ps. For those of you aware or maybe not aware, we have highly specified levels inside of the S&Ps. We term gravity points. Those are levels, okay, that we are literally pinging back and forth between. So with that, I'm actually going to zoom you in, okay? This happens to be a 30-day 1-hour chart. And again, I want to detail this. It's a 30-day 1 hour. And when I say that we're pinging between gravity points, these specific levels over here and up top here, and specifically in today's trading session, in play have been 25.75, but it does look like we're going to close right up here. What level is right up there? It's 26.26 in terms of the S&Ps. And I'm telling you right now, we're going to be driven right into it. You know, we're almost home. We're a handful of points away from it. And it seems unimaginable, you know, another 4% move to the upside over here. But again, the force is strong with those particular gravity points. So before I start talking a little bit about one of the opportunities that I see inside of this marketplace, which is absolutely in the junk marketplace, I want to detail a couple of aspects about the broader market and kind of take it from there. One of the first things that I want you to look at over here with me happened to be the advanced decline line. Now, throughout the course of the trading session, the AD line hasn't quite been this strong. I mean, this is considered kind of full-blown correlation. But interestingly enough, there's a few, okay, kind of odd stocks out that don't necessarily have news on them. Okay, one of those, I mean, throughout the entire trading session, you got to look at this again on an intraday basis. Like Citi has been underwater almost the entire trading session. Only the last couple of moments here can you see it actually spurting positive. Wells Fargo has been underwater the entire trading session. Okay, and again, most of the major banks are just not performing well, which makes sense because the interest rates today are down and down substantially. But what is almost awe-inspiring is to actually see the S&Ps up almost 100 points with the fact that the financials are drastically underperforming. And I want to reiterate that one because, again, I think that that cannot go unnoticed in here. The financials are drastically underperforming. So what is performing well? And here's kind of the irony. It's all, about the monsters of tech. It's all about Microsoft, okay? Apple, ironically, is underperforming the broader marketplace. It's really, again, it's about Microsoft. It's about Facebook, okay? But net, the monsters of tech are simply outperforming. Again, big tech outperforming here on this Monday morning. And that's an area, and I've reiterated this time and again, that's an area that I'm actually creating, albeit minimal, but short positions. And I'm taking some stabs at some short positions inside of big tech over there. I also, on this weekend's update, kind of reiterated, I've got a short position inside of Boeing. For those of you that are inside of that position there, it's 18 days out. It's an in-out spread. We're just right on the dance floor of where we need to be inside of Boeing, okay? What's also unusual about this rally, and I'm going to go through and detail a couple of things. Well, first and foremost, let's talk a little bit about the bonds because the bonds relate, of course, over to the financials. And when it comes to the bonds, once again, I said this in the weekend video and I'll say it again, they're dead. There's absolutely no volume in here. The bonds have been completely taken out of the equation, by the Fed. Now, in a moment, though, I'm going to discuss a little bit of an opportunity inside of the junk bonds, but I'll come back to that here momentarily. So the bond market out of the equation, I wanted to reiterate that. The next, the volatility. The volatility, for where we've seen the VIX since really the crisis kind of began, where we're seeing the VIX right now, it is literally right at the floor. 57 seems to be directly the floor for volatility. Effectively, what I'm saying here, hey, listen, if volatility really starts to drop substantially below this particular level, I might buy in to the idea that these S&Ps could sustain this rally a little bit longer. But right now, okay, we're just at a volatility floor. And ironically, the volatility futures, they're even bid up from where they were, okay? Again, earlier last week. If you look at the volatility futures, they're still higher from where they were last week. And I also want to remind you that the volatility, okay, they're still in a wildly inverted state. What that basically means is when you start looking at volatility out over time, when I say over time, you got May, you got June, you got July, you got August, out over time. Look at this. Short duration volatility still, okay, is smoking longer term vol. I mean, by the tune of about 10 to 12 points here from the 51-day all the way to the 142-day, which in effect still means we're in broader chaos in the marketplace. On the other volatility front, the VVIX, that's the volatility of the volatility index, okay, still kind of, again, right where that VIX happens to be, channeling in and around the 160 kind of range, which again, for the VVIX, this seems like a floor in there right now. Do I read that much into this rally? Absolutely, unequivocally not. Okay, I'm not reading into the rally. I don't look at this as taking off to the upside. Again, what I said was a little bit unusual. I'll give you another unusual aspect. Oil, $20 a barrel right now in the front month. Front month oil is $20 a barrel. It's absolutely hideous out there, but at the exact same time, okay, maybe we've seen a little bit of a short-term bottom in terms of the oil services, okay, and that happens to be your Exxon Mobils, your Chevrons. They're actually slightly bid up inside of today's trading session. Unusual? All right, I'll give you one more. The dollar. The dollar has been a great indication, if you will, as what I kind of term the new VIX. Buying the dollar looks to me, okay, like risk aversion. That is, different trading firms, banks around the world, what do? They buy the dollar when they feel the world is coming to an end. Well, guess what? They started buying the dollar again today. And again, in a very short term, that could be an indication of the marketplace about to turn back around on us. But the point of me starting with this correlation over here is, even though that individual stocks are heavily correlated, there are a few odd stocks out, okay? And moreover, between volatility, the dollar, okay, the bond market, I'm not extrapolating anything from bonds anymore, but again, between volatility, the dollar, a few other indications on the screen, okay, this marketplace is just on borrowed time. And unfortunately, that does mean I would anticipate much more sell side activity here. As I said, until that volatility starts to drop into the mid 40s, okay, get ready, get under your desk. With that, let me actually move onward and upward, away from the S&Ps, away from gravity points over here. I want to talk to you guys a little bit about junk. Okay, now there's a couple of different symbols you could pull up for junk. You can pull up, okay, JNK. Now, JNK, anything wrong with it? No. But when it comes to liquidity inside of the options market, I want to show you this because I think it matters. Liquidity inside the options market, take a look at the open interest, maybe 18 days out inside of, JNK. Oh, come on. There's a couple of contracts here, a couple of contracts there. I prefer not to use JNK. I actually trade HYG. HYG, what is it? It's the iShares junk. Okay, so why junk? Well, first of all, you'll note that I start looking at junk here on the trade tab. I don't care what the chart looks like, but I did want to show you the open interest. Everybody, okay, is trading this product. Why? Because it's the in thing. Now, why is junk all of a sudden so important? Because it's not backed by the Fed. Nobody cares about junk. It's not considered investment grade. Therefore, it's going to fall outside, okay, of what the Fed is capable of influencing. So a lot of trading firms and so forth, what are they doing? Well, they're moving away from the U.S. Treasury market. They're moving into the junk market here as traders. I think we have to take advantage of this. And the reason I say we have to take advantage of this, I mean, if ever there was a quintessential kind of rip your face off rally, people, that is it. I would still anticipate some heavy sell side activity in junk, but maybe not necessarily tomorrow, maybe not even a few weeks from now. There's two different ways I think that you could take advantage of an opportunity. Again, inside of HYG, one of the first things you have to deal with is the fact that there is a fairly substantial, yield. There's a dividend associated with this. So I wouldn't go out and just outright short, HYG. Meanwhile, you can't really short HYG because, look, it's hard to borrow. That's specific to TD Ameritrade, but it's still hard to borrow. What could I do? A couple of different trades that I might want to embark upon. One of those which, it's trading 77 and change. You can play around with this just a little bit, and I want to show you the implied volatility in here. Play around with this just a little bit, and that is, when I say play around with it, you come over here maybe and buy a 79 put, sell a 77 put. This is a $2 wide spread for about an 85-cent debit, which is kind of reasonable in terms of price. Again, it's kind of reasonable in terms of price. Why is it so reasonable in price? Because the volatility skew is favorable. You're buying like about a 31 vol and selling almost a 34 vol. Very favorable volatility skew. What else could I consider? I could consider a much more duration style position. So that one's just 46 days out and limits my risk however I paid for it. But a more duration style position might mean that, like, hey, I think junk is going to go down and go down big league. So if you think it's going to go down big league, that's when you start coming out here and fishing. You fish for something like an 85 delta, and you'd be buying a deep in the money put. A deep in the money put would be a synthetic short stock replacement, which is not always easy to do in a hard to borrow situation. Right now, the in-out spread prices most appropriately. All you have to have happen, listen, you're not asking for the world. You're asking that in the next 46 days, that the HYG drops, a bit below the 77 level. I mean, that's effectively what we're doing here with that in-out spread. Again, I think this is going to be a decent opportunity. And I'll tell you right now, in terms of this volatility, people, you can't time anything. You can't time anything, all right? We could continue to burst to the upside. But again, all I need is 46 days from now for us to be somewhere down in this neighborhood, and we're going to be gold on that particular trade. Once again, the S&P's ripped it up to the upside, coming just short of the 26. You might want to look for that one in some of the after hours trade, but we're kind of between a rock and a hard place. Listen, again, we're in the gravity points, We're either headed in 25.75 or 26.26. It's very much a binary trade at that point, but that's okay. Opportunities are everywhere. Stick to defined risk trades. Stay small. Stay alive. Just live to trade another day. This volatility is phenomenal. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.